You know, something absolutely massive is happening in the world of finance right now. For years, the biggest banks in the world have been skeptical, sometimes even openly hostile to Bitcoin. But all of a sudden, they're embracing it. So, what's really going on here? This isn't just some small policy update, it's a huge shift in the financial world, and we're going to break down exactly why it's happening. This one line from our source material really just captures the whole story perfectly. We're not talking about some slow, careful experiment here. The banking establishment is going for it, making a huge move into the world of crypto. So we're going to look at what's happening, why it's happening right now, and what this source is calling the billion-dollar catch for you. So how did this all kick off? Well, it started with a really important signal from the regulators, a green light that basically told the banks, hey, the coast is clear. You can start getting involved with Bitcoin. And that regulatory shift is what really opened the floodgates. Now, the key to all of this is a mechanism called the riskless principle. The OCC, that's the Office of the Comptroller of the Currency, sent out a letter that gave banks the go-ahead to facilitate crypto trades this way. What that means in plain English is that they can act like a broker. They can match a buyer with a seller without ever having to actually hold Bitcoin on their own balance sheets. And for them, that removes a massive amount of risk. And believe me, things moved fast. The OCC letter comes out, and almost right away, a huge bank like PNC announces they're offering direct Bitcoin buying. And if you zoom out, our source points out that 8 of the top 10 US banks have done a complete 180 on crypto lending in just the last 6 months. The dominoes are falling, and they are falling fast. So this is the big question, right? A year ago, this would have been unthinkable. Banks were not fans of Bitcoin, to put it mildly. Now they're practically racing to get a piece of the action. So what changed? Well, according to our source, the answer has to do with a powerful new way of thinking about what Bitcoin actually is. And a huge part of that why can be explained through the lens of Michael Saylor, who's one of Bitcoin's biggest champions. His whole perspective frames this as something much bigger than just another financial product. He sees it as the birth of a totally new kind of capital. This quote really gets to the heart of it. The idea here is that Bitcoin isn't just digital cash, it's becoming this foundational asset, a new kind of perfect collateral. You can almost think of it as the digital version of gold, right? It's forming the base layer that whole new financial systems can be built on top of. And here's the crucial part. For the banks, the real prize isn't just letting you buy and sell a little Bitcoin. No, the killer app, according to this idea, is lending. It's about issuing what they're calling digital credit by using this new digital capital, Bitcoin, as the underlying collateral. And the potential market for this is just mind-boggling. We're not talking about some small niche product. This new kind of digital credit is seen as a direct competitor to pretty much every other form of wealth that's used as collateral. We're talking real estate, art, stocks, bonds, the whole shebang. The source argues the potential market is in the hundreds of trillions of dollars. And the difference is actually pretty simple, but it's profound. Conventional credit is usually built on collateral that loses value over time, like a car. But digital credit is built on an asset that, at least according to this view, is designed to appreciate. And while traditional credit is tied to interest rates that are often messed with by central banks, Bitcoin's value is set by the open market. This fundamental shift in the quality of the collateral is what makes it so irresistible to the big players. Okay, so the banks see this massive opportunity, but what does it all mean for the average person, for you? This is where our source brings in what it calls the catch, the other side of the coin. The argument being made here is that this isn't about banks suddenly wanting to empower you with a new asset. It's a calculated business move. They've figured out how to plug Bitcoin into their old models in a way that's going to be incredibly profitable for them. So how are they going to do it? Well, by offering convenience. They're going to give you these super easy-to-use products, like ETFs or an account right inside your existing banking app. And in return, they'll charge you fees on everything. Management fees, trading fees, custody fees. But here's the most important part. With these products, you get exposed to the price of Bitcoin, but you never actually hold the keys. You don't really own the asset yourself. So the core argument from the source is this. The banks are making a bet. They are betting that most people will choose the easy, familiar path of a banking app over the responsibility that comes with actually owning your Bitcoin directly. It's a bet on convenience over sovereignty. Which brings us to the final and maybe the most important part of this whole story. Our source frames this moment as a fundamental choice for anyone interested in Bitcoin. 2 very, very different paths are opening up right now. So let's just lay them out. The bank way is simple. It's familiar. It's just another button in an app you already use every day.
But the trade-off is that you'll pay fees forever and you'll never truly own it. Then there's the Bitcoin way. It takes a few more steps. Sure, you got to use an exchange, set up your own wallet, take on a little responsibility, but the end result is that you and only you control your asset. It's the difference between renting access and actually owning your own property.
You've probably heard this famous quote. It really signals that we're at this major turning point for Bitcoin's fight for legitimacy. But our source adds a really important catch. This win is not guaranteed. It's not automatic. It depends entirely on the choices that people like you and me make next.
So for anyone who wants to choose that path of self-ownership, the source lays out these pretty clear steps. It's about starting small, learning the basics of how a digital wallet works, and really understanding how important your seed phrase is. That's basically the master password to your money. But the most critical step of all is getting your assets off of those third-party platforms and into your own control.
And really, this gets to the core philosophy here. The true revolution of Bitcoin, from this point of view, isn't just that its price might go up. It's the power it gives you for financial independence. The power to hold your own wealth without asking for permission from any bank or any institution. That's your superpower. And so that leaves us with this final question from the source. As these two worlds, traditional finance and Bitcoin, smash into each other, what role are the banks going to play? Are they just helpful on-ramps, making a new asset accessible to millions? Or are they the same old opportunist figuring out how to co-opt a revolution and profit from it in the same old ways? The answer to that is going to shape the future of finance for all of us.